Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for September 3rd, 2014. Let's go over a bunch of index charts first, try to figure out what the market, Mr. Market, is up to, and then we'll move on to a few of our stock picks and individual equities that we generally trade. So let me cover these things quickly on hopefully in 3 10-minute segments. First of all, let me look at a shorter term chart here. I've shown most of the longer term charts in my previous video cast. I would advise and I would suggest, I would say very strongly, that all members and free trial subscribers take the time and the patience to go through those to get a better understanding of the broader perspective of where we stand here in the US financial markets. Saying all that, this is the 60-minute chart of the S&P 500. I'm going to keep it real simple here. We're going to trade in between these Bollingers. We have 2010 on the top on the S&P SPX, and we have 1993 on the or 1992.9 if you want to look at it that way, 1993 on the bottom end. This is the trend it's been following since I would say the last intermediate low, which was the past Thursday, when we were down to the 1990 level. At this point, let me draw a couple of lines here. We have support at 1984. We have support at 1993, support at 1990, and the best way to look at it, which I've shown a few times before also, is to simply draw a Fibonacci retracement. And you can clearly see that we could very well come and test a 50% retracement on the worst case scenario, or on a very harsh case scenario, which we run 1956, which would correlate to about 300 or so points. Actually more than that, almost 400 points, 400 and some points on the Dow Jones. So that'll be roughly about what are we looking at here? 460, but yeah, 240 points around that level. So I would say that that would be sort of the harsh case scenario on the Dow coming up. On the shorter term basis, let me get these lines out of the way. We're basically going to be trading between 1993 and 2010. Keep in mind again, a date that I put through over and over again is September 8th or thereabouts, give or take that particular week, where I feel that we have an intermediate top in place. We probably pull back from that point down, and then we go ahead and ramp up towards the latter part of September. Now, keep in mind that we have some very powerful IPOs coming sometime, I believe, on the third week of September. So we'll see what happens with all that stuff. That includes Alibaba. So that's really what it is. We are on the stochastics. We're getting oversold. We're not there yet. This is a 60-minute chart, so we need to get down towards these levels here that I'm showing, around as I'm showing down here, where we would be where there should be an oversold bounce. So we still have a little bit of room to move down as we get into Thursday and Friday. We have some big events coming up, ECB announcements, jobs report, you name it. So the algos and the HFT programs, its algorithms and high frequency programs, are going to play havoc with day traders. So I suggest very strongly to keep trades small, as I have been saying so, not keep any large overnight positions, and just eat what you kill. And just the way it is. Let's move on to the IWM, one of our favorites to trade. This is a 1-hour chart here, and this is what I see going on. Believe it or not, did extremely well with this. Had the hedge put in place since yesterday, and it worked. Net, it was a profitable trade. even though I should have truly ramped up hard in buying the puts, the IWM puts that I had from yesterday. In one series that I had, they went from, as I posted, I was down like 60, 70, 80%, and then they ramped up and went from I bought them around 60 cents. They closed, I believe, around 37, somewhere around there. Then they went to 19 cents at the open, and then they ended the day up towards the mid 60 cents. So you do the percentage math. I mean, that's a big move. So I did buy a little bit in the beginning, and then managed to get out some at a very minor loss, and the remainder nicely profitably. So net on the plus. So just shows you how volatile the market is. That's the lesson you got to learn here. You know what happens in the morning into a gap up. It's very critical to know from my experience, from what I've seen, that when you have a large gap up open and you have nice fat profits, take them. You know, I generally send 80%, leave the 20% with trailing stops, and see what the market does. And if the market still keeps on ramping higher, great. The 20% go up, and the trailing stops are tight, so I get stopped out. Net, I'm still up nicely. There's a prime example today with the price lines of the world and a few other things, and you know, clicking the sell button in the first 10 minutes is a very smart move. And the same thing applies on the downside. If you're short, and you have a large gap down open, don't keep on thinking it was going to be a one-way train down. You know, generally markets and the S&Ps and the TF, which is the Russell 2000 future, they only move in 10, 20 point increments. So you don't have those 30 point down days unless you have something really dramatically, you know, something dramatic happens on an external news flow basis intraday. So 10, 20 point down moves or 10, 20 point up moves, take it. Just the way it is. So here we are with the IWM on the 1 hour chart. As you can see here, these stochastics actually, look at this spike at 3 p.m. Afternoon. All right. So this is, you know, this is something to keep in mind. Look at this. All right. Let me get my drawing tool here. Show the people. Uptrend is still intact. Okay, uptrend is still intact. Lower Bollinger is around 116, 115.95. I did call this move yesterday, and now we have somewhat of a falling wedge, which looks like it probably break up. So here we have this thing here. What do you think happened here? Smart, you know, so-called fast money covered hard, and look at this volume spike. That's big. All right, and the last time that happened was here. And that correlates with here, and look what happened after that. All right. So short term, you're going to see. Looks like, you know, it bounces. Sharp bounces likely. Stochastics are quite oversold. You can see that. These are just, you know, just try to recognize these patterns just by just by quick cursory visualizations instead of doing any heavy duty calculations. You know, once we get oversold like this, you're going to have a quick bounce. It's a 1 hour chart here. And I'm looking at very short-term movements here as we get to, as this topping process takes hold. So yeah. So basically, this is looking. It's looking okay. This is IWM. Let's take the broader index, which is the RUT, and again, we can see here that we are quite oversold. Look at these pattern symmetries here. Now, this doesn't mean that there's, you know, they can get further oversold and stay down here, but generally speaking, and we have to go by probability and statistics, the probability of a bounce is a higher probability than a complete drop. But we can still do that. You know, if you look at it, we can still get down towards 1165, 1164, which has acted as strong support. So this is the 1 hour chart on the RUT. Let me move on to the next video cast, where I'll cover the Nasdaq Composite and the VIX and the RVX and such.